In this video, we're going to share the updates to our January 2021 net worth and investment portfolio, so stay tuned.
Hi guys, I'm Tassine.
And I'm John. Welcome to Millennial Fire, where we give you guys practical tips on reaching financial independence and early retirement. And if you've been enjoying our channel so far, we ask you to please hit that like button for us and that subscribe button because it really helps us out. So we're doing this video for the purposes of sharing our net worth with you guys. And we feel like this is an important step for everyone to do in their financial journey. The reason being is because your net worth is a financial report card for how you've been progressing in your finances. So we update our net worth on the 25th of every month. So month to month moving forward, we're going to be putting out a video so you can see our progress that we're making toward our financial independence future. So with that being said, what is a net worth? Well, according to Wikipedia, a net worth is the total wealth of an individual, company, or household taking account of all financial assets and liabilities. And so the simple equation to get your net worth is your assets minus your liabilities, and this will give you the value of your net worth.
So we define an asset as anything that generates more money than it costs to have, or anything that appreciates in value.
And the second part of this equation is liabilities. And the most popular types of liabilities is debt. So car loans, credit card debt, mortgages, these are all examples of liabilities.
So with that being said, let's jump into our asset and investment breakdown. So our first asset that we're going to talk about is our health savings account. In December, it was $0. And as of January 25, 2021, we have a balance of $308.70. So what's great about this account is that you have pre-tax dollars that is saved into this account. And once you reach a certain balance, you can invest it into the market. For our particular brokerage, that amount is $2,000. And this is a secret weapon of the financial independence community to building wealth. Because once you invest this money, it will grow tax-free. And as long as you use it the way that it was intended to be used, you won't ever have to pay taxes on that money.
So the next investment that we have is our individual stock investments. And as of December 25th, the balance was $7,306.84. And as of January 25th, the balance is $7,487.43. So with our individual stocks, we choose to invest mostly in dividend stocks. But we've acquired a few additional stocks by sign-up bonuses and also referral bonuses as well. So the individual stocks that we hold right now consist of Prospect Capital Corporation, Zynga, Stretton Energy, Starbucks, Disney, Microsoft, AT&T, and Alliance Bernstein. So we want to take a moment in this point of the video to say that we aren't suggesting these specific investments for you. We want you guys to go and do your research on your own before you jump into any investment. We aren't financial advisors, so please do your due diligence before you invest. So when it comes to these particular accounts, we don't actively invest money. We just reinvest the money that grows in these accounts. So anytime we receive dividends, we reinvest those dividends into those stocks again. And so this growth that you see here is all from appreciation and dividend investments. There have been no contributions in the last month to these accounts. So if you're interested in getting started in investing in stocks, we have a link below for an app called Webull. When you deposit $100 into your new Webull account, they'll give you 4 free stocks.
So our next asset that we're going to talk about is our savings and emergency fund. Last month, our emergency fund and savings total was $17,955.24. This month is $12,709.41. So the decrease in our emergency funds and savings is partially due to the fact that we do have a property that we're actually in the process of replacing the roof. And so our emergency funds are being put to work right now. So this is something that we are going to replenish as soon as possible, but that's what they're there for, and we're happy that we have it to be able to do its job. So when it comes to our savings and emergency funds, we try to keep as much of this money as possible invested in a high yield savings account. And the high yield savings accounts that we use are Live Oak Bank for our business savings and emergency funds, and Synchrony for our personal savings and emergency funds.
So our next asset includes my 401k and Tassine's 403b. Last month, the total of these accounts were $23,997.63. And this month, it was $27,581.71. So when it comes to these accounts, the majority of our investments are in FXAIX, We do have a small portion of this money currently invested in a BlackRock target date fund. We personally aren't big fans of target date funds. The reason why we have a sum of money here currently is because Tassine's job recently changed brokerages. So in the coming month, we're going to be transferring that money to a low-cost index fund instead.
So the next investment that we're going to talk about is our Roth IRAs. Roth IRAs are individual retirement accounts that you can invest post-tax money into, and they will grow tax-free, that you can withdraw without having to pay any taxes on it once you're eligible. So last month, our combined balances of our Roth IRAs were $30,016.17. This month, the total is $32,936.65. In each of our Roth IRAs, we are invested in particular index funds, which are FXAIX, FZROX, and we're also invested in the ETF QQQ.
The next asset on our list comes in the form of our rollover IRAs. Rollover IRAs are from our previous jobs that were 401ks, and once we left there, we rolled them over to these IRAs. So for last month, the balance was $71,563.25, and as of this month, the balance is $74,580.67. And 100% of the funds invested in these accounts is in FXAIX, which is Fidelity's S&P 500 index fund. So these rollover IRAs are a great example of the power of passive income and also compound interest, because we're not actively putting any dollars into this account, but it's growing on its own without us doing any work. So this investment is 100% passive.
Our last asset, which is our biggest investment, is in real estate. And we have 3 properties. One is a single family house, one is a duplex, and one is a condo. And the total value of these properties last month was $732,668. And as of this month, the value has increased to $738,747. These values are based on Zillow.com's estimates, which are just estimates. The true value of a property is not realized until you tap into the actual value of the house by either selling or refinancing.
So this covers all of our assets. So as you see here, in total in December, we had $883,507.13 in assets, and it grew to $894,351.57 in assets. And this is a total of $10,844.44 of growth in a month. So now we're on to the other side of the equation, and that's our debt and liabilities. And as you see, we like to keep this list a lot shorter than our asset side. So at the top, we have credit cards. Last month, our credit card balance was $4,881.66. And this month, our credit card balance is $4,169.93. So we definitely want to point out here that this isn't a revolving debt that we have. We typically pay off our credit cards in full at the end of every month, but we definitely make sure that we never pay interest or never pay late fees. So a lot of the balances that you see here are our living expenses or our business expenses that will be paid down to zero before the end of the month. So when it comes to debt, credit card debts is one of the most detrimental debts that you can have in building your net worth and building your wealth. So make sure if you're using credit cards that you have the diligence to make sure you're using them properly. Never spend more on a credit card than you can afford to pay off by the end of the month. Always pay on time so you never have to pay late fees or interest, or credit cards may not be for you.
And we have a video talking about how we actually make money off of our credit cards. If you guys are interested in that, you can check that out.
So now we move on to our largest debt, and that's our mortgages between our 3 properties. So last month, our mortgage totals were $547,062.93. And this month, the balance totals $546,416.27. So given these high numbers that we're showing you, we want to bring up a very important term that we need everyone to know, and that's called over leverage. Over leverage occurs when you take on more debt than you're able to financially handle. And we make sure that in all of the business decisions that we make, all of the investments we make, that we're never over leveraged. At this point, even if we lost the income coming from our rentals, we can cover our mortgages for all of our properties to make sure that we can still move toward our financial independence future. So while you're looking at investments and you're considering taking on debt, if you are considering taking on debt, make sure that you never take on more than you can handle.
So our total debt last month was $551,944.59. And this month it's $550,586.20. And so that means we paid down our debt a total of $1,358.39. So this may not seem like a lot of debt pay down in relation to the amount of debt that we have, but this is because we consider our debt good debt right now because it is making us more money than it costs us. And the rental income that we're receiving is what is paying down our mortgages right now. And so maybe in the future, that's something that we've been talking about, at what point we'll focus on paying down our debt. It might be something that we decide to do, but at this point in time in our investment journey and our financial independence journey, we are focusing on increasing our sources of passive income rather than paying off this good debt.
So now that we have all of this data, we can run the equation to get our net worth changes. So last month, our net worth was $331,562.54. And this month, our net worth is $343,765.37. So this is a growth of $12,202.83. So we also like to include the percentages so we can get a better relative number to know how our net worth has grown or gone down. So the percentage of our net worth growth over this past month is 3.55%. So another thing to point out is when you do start tracking your net worth, it may be a negative number, but don't let this discourage you. When we got married, our net worth was actually negative due to my student loans and putting a wedding ring on a credit card. But the important thing to know is where you're at so you can know where you're going. And so the true goal of tracking this net worth is to just always make sure that you're progressing, making sure that you're further ahead this month than you were last month. It's about the improvement, no matter how small or how large that improvement may be. So with that being said, we hope that you guys enjoyed this video. We're going to be doing these at least once a month. If there's anything you would like to see covered in this video that we didn't cover, let us know, because like we said, we're going to be doing a lot of these. And once again, we encourage all of you guys, start tracking your net worth so you can have your report card to see how you're doing in your financial independence journey. If you enjoyed this video, please hit the like button, hit the subscribe button for us, and until next time, see you guys.
See you guys.